All right, let's dive into ICICI Bank's performance for the quarter. You know, the one that ended December 31st, 2024. Got two main sources here, their financial report, and then they also put out a pretty slick investor presentation. Both, I think, give us a pretty good landscape of kind of what's going on with this banking giant.
Yeah, tons of numbers to unpack, definitely.
Yeah, so by the end of this deep dive, you'll know exactly how they did this quarter, what stood out to us, and what this all might mean looking ahead.
And we'll even get into their ESG initiatives, which, a lot of companies are really focused on these days, um, including their goal to be carbon neutral, get this by FY 2032. Clearly, they're thinking long term.
Yeah. Well, let's get into the nitty-gritty. What's the big picture, the headline here, in terms of just profitability and growth?
Well, they posted a really solid increase year over year for profit before tax, excluding treasury income. It's like a robust 12.8% increase. And then if you include treasury income, it's a healthy 14.5% growth. But it's really interesting, this core operating profit, right, that grew even faster at 13.1%.
Okay, so core operating profit, it's growing faster than their overall profit. What's the takeaway from that?
Well, core operating profit, that focuses on the bank's fundamental operations. You strip away things like one-off gains or losses. So this higher growth rate, it suggests their core business, the real bread and butter, the banking, it's in excellent shape. That's a great sign for the bank long term.
Awesome. And so the bottom line, the overall profit for the quarter.
Yeah, consolidated net profit was a healthy 128.83 billion rupees. That's up 14.8% year over year.
Very nice. Now, every bank, they have to set aside some funds for potential loan losses. Any provisions we should be aware of from ICICI?
Well, they did make a specific provision of, let's see, 6.27 billion rupees. It was related to an investment in these alternate investment funds. It's required actually by the Reserve Bank of India. Think of it as setting aside some funds for a rainy day.
Yeah, makes sense. So overall, strong performance, but, banks aren't monolithic. Let's break it down by segment. Where's the real growth engine?
Retail banking,
Yeah.
absolutely stealing this show. I mean, they've always been strong in this area, but this quarter,
Yeah.
particularly noteworthy. In FY 2024, retail banking contributed, get this, 188.49 billion rupees to the bank's overall profit.
That's a huge chunk. What's driving this?
Well, a couple things. One, customer loyalty. It's amazing. The presentation actually revealed that 85% of their mortgage customers, they already have some relationship with ICICI Bank. So they're good at attracting new customers, sure, but keeping them coming back for more.
Yeah, and this suggests they're doing a fantastic job cross-selling, right? It's not just one product. But okay, loyalty's one thing. Are they actually growing their loan book in the retail segment?
Oh yeah, absolutely. Their retail loan portfolio has reached a massive 7,032.65 billion rupees. That's a healthy 10.5% increase year over year. And their credit card outstanding, now this is a number that jumps out, grew by an impressive 17.9%.
Wow. All right, is that like a sign of rising consumer confidence?
Could be. The presentation mentions improving discretionary spending, so that could be it. Plus, ICICI has been pushing these digital onboarding initiatives. And strategic partnerships, like the Amazon Pay credit cards, all makes it easier for customers to get on board with ICICI.
Smart move. Tap into existing platforms, definitely can accelerate growth. Anything else that jumped out at you in terms of retail banking?
Yeah, actually, I thought this was pretty interesting. They integrated their systems with the Bharat bill payment system using APIs.
Yeah.
So what does that mean for the customer? Well, they can now instantly pay interest on their overdraft facilities, all digitally, no need to go to a branch.
So prioritizing that digital convenience, great. So retail is strong. How about corporate banking,
Yeah.
wholesale banking?
Yeah, may not be as flashy as retail, but it's holding steady. What I found intriguing is that they're really focusing on higher-rated borrowers. 75.9% of their corporate loan portfolio is rated A or above. Little risk-averse maybe, but probably smart in this environment.
Yeah, I mean, in these times, who can blame them? But even with a cautious approach, you can't eliminate all risk. What about the, less highly rated loans?
Right. Well, their BB and below portfolio, that's pretty small, actually. And important point, excluding one particular account, their maximum exposure to any single borrower in that category is less than 5 billion rupees.
So they're spreading the risk. That's good. But even with careful lending, loans can go bad. What's the situation with asset quality?
Okay, so good news here. Their gross non-performing asset ratio has actually improved. It dropped from 2.3% in December of 2023 to 1.96% in December of 2024.
So that's a move in the right direction. Could this be linked at all to their focus on those higher rated borrowers?
Yeah, I think it demonstrates how a conservative approach. Over time, it leads to better asset quality, fewer problem loans,
Love to see it. Of course, even with good assets, banks need to prepare for losses. So how are their provisions looking?
Well, they've got a provision coverage ratio of 78.2%. That gives them a pretty comfortable cushion to absorb potential losses. And, they've been very transparent breaking down these provisions, standard asset provisions, other provisions. They've got this stable contingency provision of 131 billion rupees, like an extra layer of protection for unexpected events.
All right, so multi-layered approach. It's reassuring. They're focused on growth, but managing risk responsibly.
Exactly. Thinking long term, planning for different scenarios.
Okay, so we've talked a lot about traditional banking. ICICI Bank has other stuff going on too. What can you tell us about some of their subsidiaries and ventures?
Well, their insurance arms, definitely worth mentioning. ICICI Prudential Life Insurance and ICICI Lombard General Insurance. ICICI Prudential Life, they've seen some impressive growth. Assets under management reached, 3,104.14 billion rupees.
Wow, and you mentioned earlier their goal of becoming carbon neutral. It seems like they're not putting all their eggs in one basket. Are they also making moves in terms of sustainability, given this growth?
Oh, absolutely.
Yeah.
Remember that carbon neutral goal for 32? Well, they're taking steps, exploring solar power, increasing the use of green energy.
That's great to hear. Anything else on the ESG front?
Big on the 3 Rs. Reduce, reuse, recycle. Eco-friendly paper, green certified premises.
Good, walking the walk. What about social initiatives?
Supporting women entrepreneurs is a big one. Extended credit facilities to over 230,000 women through these self-help group loans, just in Q3 2025 alone.
That's fantastic commitment to positive social impact. So a lot going on beyond banking.
Tons. And we're just scratching the surface. There's a lot more in these reports, if anyone wants to dive deeper.
For sure. Okay, lots to unpack here. Maybe a quick recap of the key takeaways so far.
Sure. Strong overall performance this quarter, driven by that robust retail segment we talked about, and a really prudent approach to risk management. Not just focused on profits, they're taking steps towards the sustainable future with these ESG initiatives.
Totally agree. It's been a fascinating deep dive so far, but before we move on, I gotta ask, what's the one big question, that this performance raises for you?
Hmm. Well, I think the big question is how sustainable is this growth? The economic landscape, it's always changing. So how will ICICI Bank adapt, maintain this momentum? That's what I'll be watching for.
Yeah, definitely something to ponder as you go through those reports yourself. All right, now let's move on to the next part of our deep dive. We'll take a closer look at their loan portfolio and see where they're focusing their lending efforts. Okay, so we just explored, ICICI Bank's overall performance, and now I'm curious about their loan portfolio. We talked about how successful their retail banking segment is. Can we dive deeper into that? Like, where are they focusing their lending within retail?
Sure, yeah, let's break it down. The investor presentation gives a pretty good overview. Mortgages, that's the biggest chunk, accounts for 60.8% of their retail loans.
Mortgages. Okay, so big bet on housing.
It is sizable, but remember that stat we talked about? 85% of their mortgage customers already have some relationship with ICICI. They're tapping into a customer base that already knows and trusts them.
Right. Familiarity and trust can definitely go a long way in banking. What other areas are they lending in, within retail?
Vehicle loans, they come in second. 13.6% of the retail portfolio. And they've got a good mix there, auto finance, commercial vehicle loans, equipment loans, even some two-wheeler loans.
Okay, so catering to the whole spectrum of vehicle financing, what else jumps out?
Personal loans, that's a decent chunk, 17.2%. And of course, the credit cards, can't forget those, 8.1%. Remember that 17.9% growth year over year we talked about?
Yeah, real growth area. So lots of diversification within retail. Now, what about their corporate portfolio? We know they're focusing on those higher rated borrowers, but which sectors are they most exposed to?
Yeah, that's a good question. The presentation, it actually breaks it down. Interestingly, the top sector is retail finance, accounts for 37.9% of their total corporate loan exposure.
Retail finance, so they're lending to the lenders.
Yeah, basically. Think MBFCs, housing finance companies, those types of institutions.
Ah, got it. So they're supporting the broader financial system. What other sectors are they, heavily invested in?
Services finance comes in second at 7.9%. Then wholesale and retail trade at 6.2%. And then they actually have a pretty significant exposure to banks themselves at 5%.
Interesting how it's spread out. I imagine this changes over time, as the market changes. Anything else noteworthy in that top 10?
Yeah, they've got electronics and engineering, rural lending, even road, port, telecom, and other infrastructure projects.
Okay, so not afraid of infrastructure, which can be risky.
True, but those strict rating requirements, that suggests they're being careful.
Makes sense.
Yeah.
All right, so we've talked about the loan portfolio. Now I want to touch on their capital position. How well capitalized is ICICI Bank?
Right, so strong capital, that's the bedrock of any bank, especially these days. Good news is ICICI Bank is very well capitalized. Their standalone capital adequacy ratio, as per Basel III, was 14.71% at the end of December.
Okay, 14.71%. What does that actually tell us?
Well, it measures the bank's capital relative to its risk-weighted assets.
Hmm.
The higher the ratio, the better they are at absorbing losses. There's a minimum that regulators set. And ICICI, they're well above that.
So good buffer there. What else should we know about their capital structure?
Well, they've got a good mix of Tier 1 and Tier 2 capital. Tier 1, that's the core high-quality capital. And a lot of that is CET1 capital. That's like the first line of defense against losses.
So high quality, exceeding requirements, good signs. Now, they're not just a standalone entity though, right? What about their consolidated capital position, with their subsidiaries?
Yeah, good point. Consolidated, their total capital adequacy ratio was 14.52% at the end of Q3.
Yeah.
Still really healthy, even with the subsidiaries in the mix.
Okay, still strong. Anything else stand out there?
Well, if you include the profits from the first 9 months of the fiscal year, their CET1 ratio, that jumps to 15.7% on a consolidated basis.
That's a big jump. They're generating enough profit to strengthen their capital.
Right, it's a positive feedback loop.
Strong profits, that leads to more capital, which can lead to more growth and so on.
Exactly.
Now, we've talked about domestic operations, but what about their international banking subsidiaries? ICICI Bank UK, ICICI Bank Canada. What can you tell us about those?
Yeah, so the presentation has some interesting snapshots. ICICI Bank UK, they had total assets of, let's see, £2.96 billion at the end of December. And ICICI Bank Canada, their assets were at 5.44 billion Canadian dollars.
So not just dabbling in international banking, they have some real operations going on there. What about their lending in those markets? Is it similar to India or different?
It's different. Each market has its own, characteristics. ICICI Bank UK, they have a lot of their loans in commercial real estate, like 31.7%. Reflects the importance of property in the UK economy. They also have a focus on mortgages, like their parent company. Those make up 27.7% of their advances.
Okay, so they're adapting. What about Canada?
Canada, they're really big on residential mortgages, 57.7% of their total assets. Seems like they're taking advantage of the Canadian housing market.
Makes sense. It's interesting how these global banks have to, adjust their strategies. Anything else stand out about the international subsidiaries?
Well, both of them, ICICI Bank UK and Canada, they have really strong capital adequacy ratios, exceeding the requirements in their markets. Kind of mirrors the parent company.
So consistent theme, strong capital, and a diversified loan book tailored to each market. They're taking the ICICI model global. Now, it's not just international banking, though. They have other subsidiaries in India, too. What about some of those?
Right, well, we've already talked about the insurance businesses, but they also have ICICI Home Finance. Yeah. Focused on, you guessed it, housing finance.
Yeah.
Loan book of 272.8 billion rupees at the end of December. Clearly committed to housing in India.
So doubling down on housing finance, both domestically and internationally. Clearly a strategic focus. What about asset management?
Oh, they're doing that too. ICICI Prudential Asset Management Company. Assets under management, get this, 8,739.58 billion rupees in Q3.
Wow, huge. They must be doing something right to attract that much capital.
They are. They're actually the market leader for equity and hybrid assets under management in India, 13.4% market share at the end of December.
That's impressive. So they've got it all, the retail banking, the wholesale lending, the insurance. Now, this asset management, it's a pretty formidable combination.
It is. It's a diversified financial powerhouse. Each piece complements the others.
And it's a testament to their vision. They're not just relying on one or two areas for growth. This makes them more resilient to, changes in the market.
Exactly. A balanced and adaptable ecosystem. Which brings us to the final piece, the overall consolidated financial performance. We've seen the pieces, now let's look at the whole picture.
All right, let's talk numbers. What's the bottom line? Consolidated results for Q3.
Okay, so consolidated net profit was 12,883.37 billion rupees for the quarter, a big jump compared to last year. And profit before tax was 18,501.3 billion rupees, up 22.1% year over year.
Big numbers, clearly their strategies are working. But it's not just about profits, though, right? How are their profitability margins?
Right, margins, those are key. Good news is ICICI Bank has healthy margins. Their net interest margin, that was 4.01% for Q3.
Healthy margin, what's the takeaway there?
Well, it shows they're balancing growth with managing their cost of funds. Not just growing for growth's sake, they're doing it profitably.
Sign of a well-managed bank. Now, what about cost management? Are they keeping expenses in check?
Yeah, they are. Their cost-to-income ratio was 39.35% for Q3. So basically, for every rupee of income, they're spending less than 40 pays on operating expenses.
That's efficient.
It is. Shows their commitment to running a tight ship.
So they're growing revenue, margins are good, costs are under control. It's a good combination. We've examined the financials, the loan portfolio, the subsidiaries. I think we have a pretty good picture of ICICI Bank now.
I think so, yeah. Lots of good insights here.
Before we wrap up this part, what's the one big takeaway for you from all this?
I'd say ICICI Bank is performing really well across the board. Strong growth, managing risk, expanding strategically. They're not just a bank, they're building a whole financial ecosystem, both in India and internationally.
Yeah, love that. Changing the game. It's been great going through all this with you. Now let's move on to the last part of our deep dive. We'll bring it all together and leave you with some things to think about.
Okay, so we've gone through a lot. Analyzing the financials, the loans, the subsidiaries. It's time to kind of step back and look at the bigger picture with ICICI Bank.
Yeah, and what's interesting to me, they're not just reacting to the changes in finance, they're shaping them. Digital innovation, global expansion, this resilient business model they've built. And they're not just thinking about the bottom line, right? ESG initiatives, carbon neutral by 32, it suggests they're building for a future that's both profitable and sustainable.
Right, and that brings up a question. How will all this position them in the long run? Can they keep this momentum going in a world that's, always changing?
The big question, right? I don't think anyone has a crystal ball. They've consistently adapted, innovated. They don't shy away from challenges.
I agree, and one thing that stood out to me throughout this deep dive, it's their focus on the customer. Digital convenience, personalized offerings, financial inclusion. They're really trying to meet their customers' needs.
And that's so important, that customer focus, especially in finance, where trust is everything.
For sure. It's not just about the business. It's about the brand, what they stand for, and that takes time to build.
All right, so we've reached the end of our Don't Dive here. Hopefully you've gained some valuable insights into ICICI Bank.
Yeah, it's clear they're a major player in the financial world. Dynamic, innovative, forward-thinking. It seems like they're well-positioned to continue their success.
But the story isn't over. Things are always changing in finance, so we'll see how they navigate what comes next.
Definitely. And for those listening, I encourage you to take a look at the source material yourselves. Dive into the areas that interest you, form your own opinions.
Always more to learn, more to analyze. But for now, we'll leave you with this. In a world that's constantly changing, ICICI Bank seems to have figured out how to not just survive, but thrive. We're excited to see what the future holds for them. And until next time, keep diving deep.